That looks pretty good. Right, I'm going to get out of there. I presume. Okay, everyone, welcome to the original show of TTR, the Sunday Market Update for Sunday, the 23rd of February. I have tried to share to YouTube, and now I can hear myself on YouTube, which is just a little bit concerning. I'm just trying to see if I can kill the volume on YouTube. I'm just going to do that. Right, guys, we are going to go to Jeff. Hi, everyone. Welcome to Trader Talk Radio, the original show for today, the 23rd of February. Sorry for a bit of mucking around getting in, guys. We do believe that we are in and we are live on YouTube. I'm going to check that in a moment. If anyone else can let me know that for sure, it would be appreciated. Yep, we're live on YouTube by the look of that. That is fantastic. Guys, interesting show ahead. We are hoping that Julian can join us today. He has been unwell. We've got Jeff in the show today. He has been unwell. Ainsley is going to join us, and we know that Ash will be in as well. It is a busy old week of trading. Been an interesting week. Market really still struggling a bit to get its head around coronavirus and just what's involved. I'm going to hand over to Julian. We're going to start with Julian. We'll come to Ash straight afterwards. Look, I want to introduce the team before I get into too much. Julian is a full-time professional trader working for an energy company in New Zealand. All of us are professional traders. Ash is a price action trader who focuses on the FTSE, but also trades some currencies. Ainsley focuses on gold and oil. And Jeff trades generally an intraday breakout strategy. We'll talk some more about that as we go along. Julian, I'm going to unmute you. Are you ready to go?
Yeah, hi, Paul. Hi, everybody.
Jeff, can I ask you if you can share some charts for Julian, please? Load a couple of things.
I'll try and do that. Yep. I'm on my laptop and remote, but I'll get there.
Okay, let me know if you need me to do anything. Julian, how's your trading week been? By the way, mate, how are you?
Yeah, I'm sorry, Paul. I'm not feeling so well tonight. It's just one of those things that seems to catch up with me at the moment. So hopefully we'll be better over the course of the next few days. So just today isn't, I'm not 100%, but obviously I want to share with you guys what I'm thinking about the week going forward, and a little bit about, I guess, about the week that's been. I think the week that's been has been a transition week. The move towards a stronger dollar has been pretty evident, I think, to everybody in terms of what's been unfolding. I understand why that's taking place. I think the world is a little bit short of US dollars at the moment, and that is starting to, I think, really affect some of both the international monetary flows, and also we're seeing that impact as well too in the bond market in the States as well. So from my perspective, I think this is sort of, I guess, in the word of not that surprising, but I don't know how much longer this is going to last. We're pushing the commodity dollar currencies to relative extremes. I think we're pushing the Aussie dollar to an extreme. We're pushing the Kiwi down to an extreme, and the euro, as far as I'm concerned, has had a significant sell-off, really, I guess, from about 111 all the way down over the last 2 or 3 weeks. Whether that continues or not, at the moment the trend is down, and we've had a bit of a sharp pullback on Friday. But overall, in my mind, the trend is still down there, and possibly out of all of the currency moves, that's the one that I guess is the most explainable, and the one which is probably going to be the most persistent. I'm very concerned about trying to be short of Aussie here and trying to be short of Kiwi and possibly even the Canadian dollar at this point, especially with gold doing what it's doing. So,
Jules, if I could just interrupt you for 2 secs and address Paul. For me to allow screen sharing, you'll have to stop. Sorry, mate.
That's okay, mate. Let me jump up the control and I'll stop sharing. There you go, mate. You got it?
Yep. Happy days. Thank you.
Cheers.
Thanks, Jeff. And if you when you get on the screen, if you could put the Aussie up, that would be fantastic.
Right, mate. You'll have to tell me if I can because I'm on my laptop and I only have one screen.
That's working perfectly.
All right.
So guys, if you're in the show and you're wondering what's going on, our broker's server is down today. So we've got a few of us sick, and then we've got the server down. There we go. We're on YouTube with the right screen as well. If you like, Jeff, I've opened up a demo account, so I also have some charts. Would you like me to jump in and do this again?
If you're free, mate, that would be awesome.
Cheers, mate. Let me grab it back. Here we go, guys. On the demo account today, those of you who are with Actions to Wealth will understand that the IFS Markets main server is down, so we don't have main account access on Sunday night. It's very rare for it to be down, but it is down. So we are on a demo account. You'll have to excuse some pretty shabby charts. Let's go there. Rightio, mate. Julian, you looking for 200-day move? Are you looking for the Aussie?
Yeah, thanks, Paul. Yeah, so look, as you can see from this, if you could just stick a weekly chart up, Paul, that would be brilliant on your journey. So for me, what's really clear about the Aussie, and I know that I've mentioned this in the show once or twice recently, and quite rightly, people have pointed out that maybe the short-term trend is still down and it's got a little bit further to go, which is fine. But we've been going down quite consistently in the Aussie now for about 2 or 3 years, and there is a point at which you say, okay, I'm not too sure how much further we have to go. And I'm at that point now with the Aussie. I can see the commercials accumulating. The indicators that I've got are starting to give me signals that probably this isn't the right time to be short and volatility is going to pick up. And thank you, Paul. And look, let's be clear about this. I don't have a crystal ball. I can't tell you it's going to turn around today, tomorrow, or in the next few days. But one thing's for sure is we're in my view dealing with the last legs of this move rather than necessarily the beginnings of a move. So when we're in that final point, it's very difficult to try and pick tops and bottoms, and that's something that we don't try and do. We will try and wait for somebody else to do that for us. So I'm just aware that if I see ring low formations in the Aussie, both on the dailies and possibly even taking it down to 4 hours, then there could be some opportunities there. And I think that's actually something worth mentioning, Paul, is that some of the trading timeframes at the moment have been compressed. There seems to be a bit of a divergence between trying to find, as far as I'm concerned, decent patterns on the dailies. I am actually having to go down to 4 hourly charts now to find something which seems to make sense for me. And especially where we see this potential for market turns, I think that's going to come through the shorter time frames rather than anything else.
Look, I've been short the Aussie for maybe 3 weeks now, and what you're saying does interest me. There has to be a time to get out of it, and I mean, all we need is a bar to take out the top of this bar here, and we've got to ring low, right?
Correct.
So
exactly right.
Monday morning we open and get some buying, and we have a ring low. And look, I think on stuff like this, Julian, you can argue whether it's reversal or whether it's retracement, but it's probably due a decent retracement, and Aussie, like all currencies, doesn't mind touching monthly pivot. Did it last month, the month before, the month before, the month before, the month before. Skipped it the month before, did it the month before. It's not impossible to see a move back into this kind of level, or at least the month after when it comes back. The March monthly pivot will come down around here, and looking at a retracement to that level looks quite possible to me. I think I'll be closing my short and taking some money at this point.
Yeah, look, and like I say, Paul, for all we know, it might keep going down on Monday, and that's absolutely fine. But I'm aware that we're entering that zone whereby I think the potential to make a huge amount of money to the downside is going to be relatively limited. Do you have the wind at your back? And the answer is we're into the vague territory where the Aussie is about as cheap as it's probably going to get. There's a lot of negative factors included in that price at the moment, and it doesn't really take an awful lot in terms of positive news in order to turn this around. And I think that's to some extent, the story in the euro as well too. Although I have my reservations, the Europeans have slightly different economic situation. The way in which the euro has been trading, it's broken out of a trading range to the downside and continues to try and head down. You know, we've had about 10 or 12 days, I think, straight down, and then we had the retracement on Friday. So the retracement back up to where that, I guess that's your weekly pivot that you might have in there, Paul. So that's the trading range it broke down from. If you look in terms of measuring that and you swing that down, you sort of got to roughly where those lows were put in place earlier on this week. And subsequently, I'm sort of the opinion that exactly. So that sort of swing high, swing low approach that we may be near a bottom in the euro,
we're
but
up around this level here. Oh, yeah.
exactly. But I'm not hanging my hat on the euro. I think it's too early to say. What I need to see in the euro is probably some kind of higher low formation before I'm going to get excited about buying that. So we've got a few days to go, and it might not happen that it's going to happen on Monday or Tuesday. Might take a few days to unfold. So I'm conscious. This is really me out there calling a bit of I think a bit of a short-term top to the dollar. So I expect to see there to be some price action around that. The only real currency where I'm not exactly sure at all that the dollar has stopped strengthening is possibly against dollar yen. I don't quite understand what's happening in that at the moment. That's running against my my technical indicators. The move upwards in dollar yen was surprising, and that took place over the last couple of days. And again, you know, you've got to respect that type of breakout and say, well, if dollar yen's going to move that much aggressively higher, then you've got to look to try and get on board in that move, and maybe it's there's a little bit further to go, right? So that doesn't look like that moves over, and if it is, and that's quite surprising. And by the way, if it is over and we retrace back to 109.50, 109.70 area, we're going to go to 105 in about 5 minutes flat. So that will be the false breakouts of all false breakouts, I think. So there's a very easy way to trade this, which is to try and get on board between a 111.30 and 109.60. Sorry, 110.60, 70 area, somewhere in that. And again, looking for a retracement to get that position on, going with the overall trend, and that's going to be my target for this week. I think when you look at other commodities as well too, so I quite fancy buying oil at the moment. Seasonally, it's a great time. What I'm looking for again over the next couple of days is a trend down, just a little bit of a move back in that market to give us the opportunity to get on board. We're seeing some retracement. Exactly. Thank you, Paul. So again, I'm looking for the percentile to get oversold, short-term percentile to get oversold, and then I'll be looking to pick it up either via a 4-hourly ring low or some other kind of formation, again to try and signal that somebody else is also buying it rather than just me.
I think we talked about it last week as well, Julian. You know, Angel talked about this, no doubt at all. But you know, while we had the big sell-off for coronavirus during this period, the seasonal up is long and strong, and we will always like to see some buying come in off the double bottom, and we certainly got it. Bit dodgy up here, bit concerning the little fade here.
Yep.
But we should be in it, and you know, we should be stopped well past break even if we're long on this, and pretty happy with where we are.
Exactly, and look, in terms of trading from here, you know, this is about adding positions to the seasonal long already. So you're looking for the market to come back down again, to set a higher low, and that might well be a decent signal. You know, again, you're respectful of the fact that we've sold off significantly, and if the coronavirus, you know, appears to be getting slightly more out of control internationally, which is what's happened over this weekend, I wouldn't be surprised to see that oil open lower on Monday, and that might be an interesting area. Which then sort of, I guess, gets us on to really what's happening in stocks and equities around the world. You know, I've been fairly negative on those for about 2 or 3 weeks within the broadcast group. We did make a call around that. That hasn't quite worked out if you're trading the Nasdaq, but pretty much everywhere else, I think that early call has been heeded. Really, the markets are struggling really to make much headway. You know, really, it's the Nasdaq S&P thing that's just holding the whole world up. And I think, again, what's really important here is about what's going to happen on Monday. Monday's a pretty pivotal day. We should, if the market is trading off the virus, probably open lower, given the bad news that's happened over this weekend about international cases. Unsurprisingly starting to accelerate, which is sort of what we thought might happen, regardless of whatever's happening in domestic China. And we'll see how that unfolds over the next few weeks. But bear in mind, the stock markets are in what I consider to be in the United States a state of hypervaluation. I think this is very similar to where we were in 2000, but for different reasons. As it usually is different this time, and they represent a not a great place to be investing for the first time in stocks. Your returns over the next few years are pretty poor if you looked at where you're going to, how much money you're going to make going forward from here on expectations basis. So probably I think it's time to be cautious, and subsequent to that, we're seeing that across the other international markets as well too, which is then again that also feeds into some of the other thinking that we have. And I think part of the move we saw on Friday, as well as being short covering in those currencies, was also a result of some of the weakness in equity starting to spook the markets and a bit of a flight to quality taking place. Although, to be honest with you, Paul, right now I'm not exactly sure what the flow is anymore. There is one example of it there, and thank you for putting it up. That's the gold chart. That I guess will be the classic flight to quality. You know, we had a discussion about gold last week. I remain concerned that the commitment of traders is increasingly short, and there's I think a new high in commercial shorts coming in here. This is not the start of a new move. I think it's the end of an old move, and I just don't know how it's going to unfold. So I'll let Ainsley comment a little bit more on gold. She's a little bit more in touch with it than me at the moment. I thought the risk was higher when we spoke last week, but I was still pretty neutral about where that was going to unfold, bearing in mind the fact that this isn't a screaming buy, and it's not the start of a new move. This is, as we can see from that chart. In fact, if you go to a weekly chart, you'll see it's the end of a move. The question is, where does that move end? And it's an odd place for it to end here, so maybe it has to go a bit higher first. But again, you know, I remain concerned. The seasonals in gold turn around in about 3 weeks' time, and maybe that's the signal that we're going to need. And if we are starting to put a retracement to the old highs in place, then maybe we have to go a little bit further. I don't know. And I don't really have much call about what's going to happen to gold in the very short term. Yeah, sure, it looks like it's going up, and any retracement on the percentile or something like that, you'd be looking to pick gold up. But bear in mind what you are at the point here is that I think the trade is long, but you're vulnerable to a sharp sell-off because the seasonals kick in, I think, in about a week's time, 2 weeks' time or so. Ainsley will know that better than me. And there are some opportunities there, I think, to see quite a significant move down at some stage in this. But right now, it's not at the moment. This thing trades about as well as it could do. And, you know, if you were going to look for stock market sell-off and what the implications of that, it could push gold to new highs. Paul, that's pretty much it in terms of what I'm thinking about for this week. That's my overall thoughts. My main worry at the moment is the international implications of coronavirus. I'm being surprised how long the international community has taken to understand that this is an international disease and not just a Chinese one. We've already seen the impact here in New Zealand in terms of the supply chains and how it's working. I think maybe that just hasn't got to the markets in time. And it's just starting to come now. And I think that's a really key point, is that possibly some days I don't realize how close I am to it here in terms of seeing how those supply chains work. Because New Zealand's quite a small country, we see the impact very quickly.
Yeah, I've got to say, Julian, I don't quite know the word for it, but there's been a little bit of indifference to it from people who don't live in China, and I'm surprised. Some of the things I've seen and heard on Facebook from people I know, you just read it and go, "Gosh, mate, there's 2,000 people dead. You've got to be kidding." You know, that's not quite what's happening. Be interesting to see how it goes. The numbers in South Korea are pretty scary. If it can go as quickly as it's gone there in any other country, you know, that is genuinely concerning. And obviously the numbers in Italy have pushed up a little bit as well. And yeah, we will wait and watch. And really, you almost feel now that we're only a week from this being a battle for containment to being a battle for cure. You know, if we don't have it under control in the next week, you know, and again, we've got some places that's out of 10 different countries. It's gone. Malaysia's nearly 10 days since its last breakdown. Singapore seems to be slowing. You know, it's not all bad news around coronavirus, but I don't think they've got a lot longer. If we have another 2 or 3 countries follow the South Korea model, then really it'll become, we have to find a cure as opposed to we can contain it. You know, let's hope for better news on it. And again, one thing I do think we're going to see, Julian, is we're going to see a very, very dynamic market at times in the next couple of weeks, aren't we? As numbers come out, I think the market, if we saw numbers in Europe or America push up like they did in South Korea, same kind of ratio, maybe pretty much doubling every day for a few days, the market will be a shambles. And if China can have 3 or 4 days with no new outbreaks, then we'll believe that it's all going to be okay, and we'll see the market go the other way really quickly. So it's going to be an unpredictable and volatile market for mine.
Yeah, exactly, Paul. I think one thing to bear in mind with all of this, the environment we've just come out of or just going through at the moment is a very, very low volatility environment for FX. Right, we've seen movements where the market moves 20 cents in a day, and the people think that's movement, right? That's
Yeah.
what we saw last week in euros and in dollar yen is not unreasonable in normal market circumstances. We really have been super low for volatility in the foreign exchange market. And to your point, Paul, I think a lot of countries are relatively unprepared for quarantine for 2 weeks for any portion of the population. It's something, guys, for those guys out there who have jobs. Just it's a very easy question. If you're not in Singapore or Hong Kong and you've seen part of this, just imagine what not being able to go to work to the office for 3 weeks looks like, and still carry on in business, right? It's a major issue, I think, but which hasn't really been addressed yet. But we'll see. Hopefully, fingers crossed, the death rate is reasonably low, lower than predicted, and let's hope the outbreaks get contained, even the international ones. I am, as always, an optimist about our ability to beat these things. It's just the journey can always be interesting.
I don't want to get too far into the death rate stuff, Julian. It's not the place, but to compare the deaths versus the infections today and call that a death rate when it takes 2 weeks for people to become dead from it, the death rate's ridiculously higher than what they're saying. And it really concerns me that they're saying the things they are about it, because they're just obviously not true. And, if you have a look at the rates between recovered and passed away from coronavirus, you're in a different world. And what I do hope is that as it goes on, it will get, well, let's hope it does get less and less, and let's hope it doesn't go on. And, we live in a world where there's some pretty clever people who'll be working pretty hard to find a cure for this and something to stop the spread completely. And let's hope they get to work and make some progress.
Mate, I'm a bit like you. I don't want to be alarmist, and that's not what we're here for. We're here to probably just give a balanced approach to what. And Julian, I think, hit the nail on the head. The market's been extremely slow and reticent to react to this. But I heard on Thursday or Friday, I can't remember when, that a lady is showing symptoms after something like 37 days since she was exposed to it. That to me is far scary. That's far scarier than anything.
You've got to be careful of this kind of stuff. There's all kinds of stuff goes around, and whether it's true or not, if it doesn't come from the BBC or one of those kind of news services, I think you just got to put that to one side. Let's move on from coronavirus. We'll come back to it. The one thing I will say on it, and I do want to wrap it up, Julian, is if other countries are as badly prepared as New Zealand for it, then the world's heading for an interesting place. Ash, are you muted, Ash?
Oh, yeah, I was. Yeah. How are we doing?
Mate, we're doing pretty well. The coronavirus chat's a bit negative, isn't it? It's not particularly. I'll tell you what. Interesting. It's our second time on YouTube. We've been running the show now for a number of years. Me and Jeff been running this maybe 7 or 8 years. And I've got to say, I don't remember a week quite as brutal for the team. We've got Julian sick. We've got Jeff sick. It's been a reasonably brutal week for Ainsley and myself with some other stuff going on. It's just been a busy week. Now we have the IFS market server down, so we can't use our live charts for the YouTube show. We've had a frustrating week, but we are still good because life's okay, isn't it, mate? Mate,
yeah.
Start us off. First of all, I imagine Julian's still in the room. Anything on the FTSE from you? Where are we going? Is the market gapping down Monday morning?
I would suspect so. Yeah, I would suspect so. I mean, if we think about what happened last time, we had a bit of a pickup in coronavirus cases. There was a gap down in the FTSE early doors, and that did put some pressure on the markets. And I suspect that'll probably happen again. It's getting a little bit closer to home now because we've got some issues in Italy where they are shutting down, parts of the economy. They're quarantining a range of around about 50,000, an area which contains about 50,000 people. They're going to be postponing some football matches. And we've already seen some problems in, forgetting just the coronavirus, we've seen some problems in some of the numbers from Germany. And that really does become a main focus because Germany is so closely correlated with China. If we're starting to see any kind of economic slowdown, then it's probably going to hit Germany, from a European perspective, it's probably going to hit Germany first. So looking at the numbers last week, it was suggesting that the market was under pressure. Couple that with the fact that we've seen gold rallying, equities rallying, bonds rallying, the dollar rallying. Odd. Doesn't tend to happen very often that you get all those four things rallying. So there is obviously some protection going into place.
Really
While
is
people,
for people who are in the room that are new to trading, to see all of those things. When one of those is going up, another one often reacts and goes down. It's like really unusual to see them all going up at the same time, right?
yeah, because you'd certainly, the way that gold's been popping forward right now, it does appear to have been, as much as anything else, a bit of a protection play. And I've seen gold and equities rallying at the same time quite aggressively. Certainly off the back of the 2008 crash, we saw a fairly healthy rally in both of those two aspects. But to also add bonds, bonds are incredibly defensive, really, and the dollar as well, which has become a little bit of a protection play. To see all those things rallying at the same time, it does suggest that there's some serious protection going into the market as people probably do divert out of equities. And I'll show you some charts because it's going to be important, really, just to look at some of these global markets along with if whoever's got the screen could stop sharing just for a moment.
Oh, sorry about this, me. Here you go. You grab your charts.
Great. Let's get rid of some of these. I've got a little. Oops. There we go. Right. So in fact, I'll need this one. Let's just have a quick look at some of the global equities. This is what we got. So S&P really has been it has been leveling off somewhat anyway for a little while now, the S&P, but it has now. I'm looking at this weekly chart and starting just to see that there could be. I mean, we've seen it here, and it didn't really give us too much of a move to the downside. But it is another just a quick hint that the S&P may well be at a point where it's about to weaken a bit more significantly. Same thing with the Dow as well. I think the Dow might be a little bit clearer because where we see a few weeks ago, it hasn't really made too much headway. In the last month, it hasn't really gone anywhere, the Dow. So it is just starting to level off when it comes down to its expansion. And it does have an area down here that it could do with coming back and testing, really. So if we look at, if we look at down here, then it's 2,700-ish, and it's currently around about 2,900-ish. And then obviously, we've seen gold popping again to the upside. It does start to look a little bit overbought up here. So pretty difficult chart to try and jump on board with now. But then if we bring the FTSE 100 back into play, the FTSE 100, as really we've been saying for a few weeks, has got a different look because it hasn't been explosively rallying to the upside. So it was already under some pressure, the FTSE. And yes, back to your original question of do we gap down on Monday morning? There's every chance that we're going to do that, gap to the downside. And then we're going to have to start looking in these lower areas. Are these lower areas then buying opportunities? And what would promote a buying opportunity down here? What's going to have to be the thinking down here? It's possible that the market comes down even harder, and we're actually looking for the market to, actually come down. I'm calling the market the FTSE 100 at the minute. The FTSE 100 to actually retrace to a primary trend line. Now, the primary trend line is drawn off the monthly chart. So does it come all the way down here before we start to see a buying opportunity? Now, that's 700 pips. That's a 10% drop to the downside in the FTSE. And we were looking at the likes of the Dow and the S&P potentially coming back, something like a 10% cut back in the S&P, 7 to 10 cut back in the S&P wouldn't be too out of the question. It would still maintain the primary trend to the upside, so the longer term move to the upside. Same with the Dow. Look at this with the Dow. This is the monthly bar with the last month's bar with the Dow. I think this coming week is going to be quite significant for the Dow, because if the Dow also puts in another week like it did last week and it ends up at the lower end of the range on this monthly chart, we're looking at two potential bars that are suggesting that the weakness is starting to bite up here. The S&P doesn't look too dissimilar. This particular bar is still just probably edging on the side of negative. So does this come down this week again, to a significant area at the lower end of the monthly chart? So that's what I'm looking for, really. The monthly bars, we're now stepping into that that week of the month where we can start to focus on this bar and see what's going to happen. And we know, just like all time frame bars tend to move in their direction towards the end of their time period. Now we're heading towards the end of this month this week, so let's watch out for the monthly bar on the S&P. Let's watch out for it on the Dow Jones, and also on the Nasdaq, which is this will do. So this is the Nasdaq parabolic moves to the upside with the Nasdaq, and eventually we are starting to see it cut back. I think this one maybe looks a bit more concerning. 2 days in a row that actually looked fairly negative. Certainly Friday's bar was pretty negative. So I think a gap down is highly likely. I think we are looking for, if we're not short already, then we are probably still looking to go short on the FTSE 100, certainly, if it gives us an opportunity. And if we miss the short because it gives gaps and goes, then we are looking just to wait for the market to cut back to an interesting point so we can pick it up to go long. But it does beg the question: what's going to promote us to go long? And it's got to be down to government and banking action. The central bank's action. What are they going to do at this stage? Are they out of bullets? Who knows? Do they decide that further liquidity has to be pumped in? We know that China have already moved on that, but will the central bank in America do the same thing? And because if we see more liquidity, then there's every chance that the market could actually just about hold on to these areas. But if we don't, I think this market could be coming down finally fairly hard. And as I say, 10% cut back on the FTSE wouldn't be that surprising. I think the same with the S&P and the Dow.
Oh, 10%, that's a decent fall.
Yeah, I think so. I mean, I find it difficult to focus on the numbers with the coronavirus. I think it's all about the action that is being implemented, and the action that's been implemented so far has to have some economic damage, even on a local level. And as I said, we need to watch the numbers in Germany, because that's where we'll really see what the effect has been globally. From the supply chain in China, one of the areas, it's not the only one. We heard that Apple last week were cutting their earnings forecast. So they've already intimated, and we're talking about Apple. We're talking about a company which is bigger than most countries financially, saying that it is going to affect their supply chain and production line as well. So if Apple are saying it, then you have to say that that some smaller businesses that probably prop up a lot of economies, that some of those smaller businesses are going to be pretty detrimentally affected. So I'm looking to see what governments are doing to contain the virus, and how it may affect the economies, the local economies of some of these places.
One of my friends owns a fashion factory in China, and he's got some staff back to work, but by regulation where they work, they're not allowed to work. I think they work 11 to 4 because they're not allowed to work through a meal break.
Right.
So they can come and bring a snack, but as soon as they have to have a meal break, they've got to finish for the day. So not because they can't congregate.
Right.
So have and this isn't just his factory. This is the whole area. It's a major. Not a small place in China that his factory is based. So I think the supply chain issues that are going on out of China are going to be staying for a little while. And while some factories have reopened, I think that even the ones that have reopened are restricted. And of course, Apple had 21 stores in China, didn't they? And only had 4 of them reopen, I think, from memory. Same thing, limited hours too. The stores that have reopened.
Yeah.
So they really have. Be interesting to see how we will see more effect from all this. I think for the market, Ash, doesn't it depend a little bit? The market's been sluggish to react, and that's because the market thinks it'll come right. As long as the market thinks it'll come right, some guys will hold, right?
I think that that's to a degree that's the case, but I also think that there's so much liquidity, from the banks just floating around the market, that it's kind of fine anyway right now. That I think that becomes a story more than as much as anything else, because it does become a problem of where you put your money, where you're going to park it. If you take it out of equities, where are you going to put it? Because so many other asset classes just don't give you the return.
Is gold the only answer to that?
I beg your pardon?
Is gold the only answer to that at the moment? You put it in gold because gold will, as a safe haven. The worse it gets, the higher gold will go.
Yeah, and the thing with gold is that it seems like a pretty sensible choice right now, because any going towards any savings accounts are going to give you, in some countries, a negative interest rate. So gold seems like a pretty good spot right now, giving you 0%. Why not? Why not at least get the asset class which is rising? So yeah, gold. I mean, if I was really had my finger on the pulse a few weeks ago, I'd be investing in things like Zoom and Skype, because it is these companies that are probably going to see a quite a big take up in how business can continue to run, because business will find a way. There's already been flights cancelled. We've seen the British Airways group, IAG, cutting flights. That all flights to China to Shanghai have been curbed. We're seeing reduced air travel as well. That there's so many different things that have been cut back. So if you're taking your money out of some equities, then it makes sense to me that you'd probably put it into equities that allow business to continue to thrive, and it will be things like Zoom and Skype. But if we were looking at what instruments that we could trade, then yes, I would suggest that gold would be an area that you could put your money. If you were looking around at specific currencies, I really like the Swissy. I mean, I think with something like this, if you're looking for safe havens, then you want to look for currencies that in this particular environment would have a trade surplus. I wouldn't be looking at trade deficits right now, as it may not give you the whole picture. Then you certainly want to be starting to look at currencies that run a trade surplus. And because of the GDP numbers out of Japan recently, I don't really like the yen, and I'd have to just edge towards what the Swissy offers. So that would be probably the other area that I'd be currently looking. It's probably in that kind of region. Aside from any of the others, I'm not too sure. I mean, the dollar reacted really negatively on Friday after some of the numbers from the United States, but it just goes to show how jittery the market is, because gold got an extra boost really after those numbers came out of the United States on Friday, but it's just one number, and all of a sudden, bang! Gold moves to the upside as it did, and then you can really go around right across the board. Look at the euro banging its way to the upside, and it's so oversold in this particular area that it's going to take some small bit of detail from from one number to jump it in the other direction for a little while and get everybody caught on the hop again. But I wouldn't be looking too far away from some further dollar strength either.
Okay, I want to ask a couple of questions. Look, I've got a number of questions coming in. It's always great to have the questions. We need to answer the questions that have to do with the show. We're getting a lot of questions which are about Forex trading in general, and we need to finish in a reasonable time on this show, so we can't just wander off and get into all kinds of other stuff. A couple of questions asked: what's the difference between UK 100 and FT 100?
The FT 100 is futures.
Okay.
So the UK 100 is kind of like it's
CFD.
Yeah, it's kind of a combination of the cash and the futures. I don't particularly like looking at that. They're very similar, but the futures isn't actually accurately traded market. So I look at the FT 100.
Which platforms do you recommend to get the latest news of Forex?
Oh, do you can't go wrong with Forex Factory. Forex Factory is a great little place to start. It's it pumps out data, so you can have a look at the data. Bloomberg's a really good source of a news feed. There's Market Watch. is it ADFN as well? You know, there's quite a few out there, but somebody was asking me about a platform the other day. Is it a good news feed? And I'd never heard of them, but my response always is, if it's provided you with news that has helped your trading, then use it. But if you go on to things like Forex Factory and click on some of the links that are provided, then they will take you to other websites where they got the news from. So then you can start building up a bit of a library of your own. You know, Reuters, another great place to find news and information from. But there's a plethora that I beg your pardon?
Daily FX real-time news. They run a nice news service as well out of there.
Yeah, and it depends on
It's a
what you're
traders
looking
service,
at.
you know. So it tends to be, it's run by the traders of Daily FX Live, and you know they seem to run some pretty good stuff for mine.
And I think if you're after things to do with the UK, you know, just have a look at the BBC, have a look at the Bank of England's website, and it is all dependent. But just for small data points, then even your broker will provide you with some bits and pieces. But yeah, I mean, have a click around on some links out of Forex Factory. That's a pretty good place to start.
Cheers, mate. We are well past our goal of trying to get this done in an hour today. So I'm going to move on to Ainsley, have a chat with Jeff not long after that. Ainsley, gold and oil, what's happening for us this week? Thank you, Ash. Much appreciated.
No problem at all. I'm going to stop sharing. I'll see you guys next week.
Cheers, mate. See you next week.
Hi there. How are you?
Good, Ainsley. Going to grab the screen.
Okay, just close those questions. Share screen. I'm going to go with screen 2. Share. Okay, is that all right? Can people see that one?
Yep, we got you. Yep, and again, you're obviously on a different program because the IFS servers are down.
That's right. So I've gone to Market Scope, but what I've got here is on my left-hand side is my 4-hourly and the right-hand side is my daily chart. So you can see both simultaneously. But yeah, didn't gold have a nice little move up after we said it was going to go north? Or I think I said, and Julian came around to my way of thinking. I had a nice run up here on this spike, and then I've taken another big spike up, on another big run on this end. And as you can see, it's been progressive the whole way through the week. And whilst Ash made reference to some of the numbers that have come out, and there was an almighty rally up, and on the weekly it looks really strong, it's been consistent since it's broken this level of this box of consolidation, come back, retested it, and taken off again. Now, I think what we can see here is a consistency with we are talking about the coronavirus, but what I have been reading the whole week is that it's not just affecting Asia anymore. It's really affecting and starting the traction of how deep the supply chain is going now is really starting to bite. And because of that, we're going to see a flight to a safety or safe haven. And at the moment, all the currencies are not looking, they're all looking a little bit wobbly actually, except for the US dollar, but gold being a nice, stable, safe haven, that's where we've had the flight to. So I've done quite okay out of this. And as we know, I think I said last week, we're into the last 2 weeks of the seasonal upthrust on gold, and let's watch really carefully. So what we've got now is last week of February. It can be a little bit iffy. Whether that pulls back, don't know. It's not an exact science with the seasonality. It really is just something else in your favor. But you know, as Ash showed us on the monthly chart, we've really got a strong, it's looking very overbought, but yeah, it was looking very overbought there. Didn't come back that far here on the daily, did it at all? Didn't break anything lower to the short side. And then just nicely bounced. When it finally bounced through the monthly pivot here, it just took off. She was off and away and hasn't really looked back since. So I think the coronavirus is going to be, as we said, breaking it down into the nuts and bolts of what it means on the supply chain. And as you've just pointed out with your friend with the manufacturing setup in China, he's one of how many? And that's just in manufacturing, as all the supply side and all the knock-on effects that that has as well. So I think over the next couple of weeks, we're going to start to see the economic reality of what this is really going to cost. They were saying, I mean, was it $30 billion it's going to cost the airline industry alone these last 6 weeks? So yeah, it's impacting everywhere. But gold, I think, is just being referred, is just really enjoying being a safe haven at the moment. So let's move on to oil. Oil's been an interesting, we went through that last week, and how slow is this? It's coming through, sorry, really slow. Gotta love my internet. We talked about this last week being, we saw a nice double bottom here, and seasonally it is the strongest for it to rally for the whole year. I think it's got a 90% over 15 plus years record of rallying from this time right through to the beginning of May. This retracement here was going pretty strong, and I was actually hoping for it to come and kiss the 200 moving average on the 4-hourly. It didn't quite make it there. But in this time here, about this time here, Russia announced that it was not going to play ball with the proposed cuts. It didn't want to play at all. So it did actually come back at quite a rate here. You can see it retracing on that news, because if Russia doesn't play ball, then a lot of the other OPEC plus countries also see it as a bit of a hall pass not to comply as well, even though they don't really comply. But you know, it's like, well, if he's not doing it, I'm not doing it either. So we've got some very unpleasant playing in the sandpit at the moment. Again, news out of the US, it's good. And we all know that oil is really sensitive to news. It just moves really very sensitively. And down it came and bounced, and off it went again. So how that continues this week, I'm not sure. But again, trade carefully. If look, it's still looking like it's on its way up. Like, looks like a nice rally up. On the weekly, last week we had a bullish engulfing, very strong off a level of support, and it started. But this week, just trade really carefully with tight stops if that's where you're going with oil. I still think it's going to go long, and we'll see where we go from there. But yeah, I'm looking a bit long on oil. I need for it to come back out of this area here and break to the north.
So don't rush into these positions, right, Ainsley? We're expecting gaps on Monday morning, possibly a gap down on oil and a gap up on gold. We need to let those shake out for a few hours before we start getting into this market too quickly, right?
Don't get in too quickly. That's not a setup. That's not a setup. We just wait for the entry to come through. But this is where my bias is for the week, not for 9 o'clock Monday or 10 o'clock Monday morning when the oil market opens and bang, you can get a trade on. It is my bias for where I think it's going to head towards the week. And as you know, anything can make that change. Any news out of any of those countries on oil can really spin the dice. So, and the only other one which has had a really, I was crying on this one, on the Aussie dollar. Oh my Lord. Look at this, the poor little thing. Down here, we were under 66 cents down there. I mean, clearly it didn't like it and it rebounded. But here, bad unemployment figures, and it just, current account deficit was bad, unemployment figures, and coronavirus, and biggest trading partner, and it just, look at that, just fell away like somebody taking its knees out from under it, and just away it went. It just very, very sad. So I'm leaving that one alone. I can't see anything on that one at the moment. It's just sick as a dog, to be quite honest. I'm hoping that it's bottomed out, but I think before it bottomed out, before it had another go, it would have to come back down and retest this level before it went up again.
Okay.
Maybe we wait until the Chinese government whacks some liquidity and tries to kickstart the economy again.
These things are all interrelated, aren't they? We're going to see at some stage some better numbers on coronavirus. Hopefully, we're going to see some stimulus from the Chinese government, and all the stuff that sells off when things go bad is going to jump back up. It is going to be volatile. Volatile is really about how much it moves in a day, if you like. So we've seen some quite small daily bars over the last 12 months, 18 months. We see, sometimes daily bars down around 30 or 40 pips. We're probably used to seeing them at about 120 to 150 pips. We could well see daily bars around 200 pips, 250, and then the next 3 or 4 weeks, as we get big moves, just shake the market out. And it makes trading exciting. It makes trading, you can make money a lot quicker. You need to have good stops because you can get caught for a lot bigger amount as well.
For sure.
Ainsley, is that you?
That's me for the week. I think we're good. I think you're right, Paul. We're in for a lot of volatility to come down the track, but make sure you're on the right side of it.
Look, it's one of those things with volatility. It's as a trader, it's what you really want. It's how you make your money. Volatility is a great thing for us. It's just about understanding when it's predictable and when it's unpredictable. I'd suggest that it's only timing that's unpredictable right now. We will see markets go up and down a little bit in the next few weeks based on the news. And if you're in front of your computer, the thing you need to not do is chase that volatility. If you're half an hour late, then you've missed, and you let the move go and wait for the next one. If you're in front of your computer, you maybe get in, in the first 10 minutes and do really, really, really well. Jeff, are you with us? Sorry, Ainsley.
I was just saying I had that situation as well, and I was crying in my soup, as you know, because I missed the entry and it was just moving so quickly and so strongly. I could not get on the trade, and you don't chase trades, but c'est la vie. You just don't chase
there'll be other good ones, Ainsley. That's the thing, isn't there? One thing, we talked about this in Actions 12 update a little bit a couple of weeks ago, that what you got to do is be good at what you're good at. And, if you're a trend trading to make your entry and make your money, and if you miss it, you've got to wait. What you can't do is try and become something else, where you start trading in places you're not used to trading. You just got to wait. Next time you've got to get it. That's the way it works. And make your money when it's trending if you're a trend trader. If you're an Actions 12th client, you've got some questions and we don't answer them in this show, I'd suggest you come along on Monday night to the interviews with the support sessions with Willie, or the fortnightly extra sessions we're having for the mentorship students, and ask them there. We do need to keep this show on target and on time. It is a market analysis show. So some of the questions outside of that, time-wise, will be difficult for us to get to today. Hopefully, we're trying to be a little bit quicker, a little more efficient in doing this. If we can stay inside an hour next week, we'll be able to answer a few more questions. We may get inside an hour yet anyway. Jeffrey, how you doing?
Yeah, getting there, mates. Can't find any rum in the house, Ainsley, but it's...
There's only one reason there's not rum in your house, Jeffrey.
Yeah, go on.
You drank it yesterday.
Incorrect.
That's the problem.
that might be the problem.
Feeling, mate?
Mate, if you, I appreciate you being here when you're not feeling well, mate.
Look, I'm on the up. I think I'm on the up. We'll put it that way. I've actually tried a glass of wine whilst the guys have been talking, and so far it's okay. Not too dusty.
That's good. Try the second glass. You'll feel much better.
moving right along as we broadcast.
Full of good advice, mate.
Yeah. Jeff, technically what are you looking at this week?
Mate, I'm going to throw a spanner in the works, and I guess there's nothing unusual, but all I'm hearing is overbought, oversold, and technically I can't argue with any of that. What I can argue with is yes, but nothing's changed from coronavirus to China's situation, and therefore I'm going to concentrate on the Aussie again. Yes, it's a really, really poor time to get into it, and I agree with that. But I just, and I've said this for weeks and weeks and weeks, of course.
Let's remember, Jeff, you trade extremes, right?
I do, yes.
So you're going to be loving this market because it's at extremes.
Yes, it is. But that said, again, I've got some very good reason to think that this can go further in the Aussie in particular. And that's, again, what I'm concentrating on.
Let's have a look at the Aussie and hear about how it can go further.
Well, I
I'm
will.
pretty happy with that, Jeff. As you know, I'm in a long-term position of short on the Aussie, and I'm thinking about cashing it out. I'm pretty keen to see what you got to do.
Don't be too rash, mate. I don't think.
You gonna
You
see your
might-
screen, buddy?
I thought I was.
Well, no.
Jerry.
Okay, let me try again. In the words of Francis Albert Sinatra,
Jeff, first, yeah, we've now got a
a desktop.
desktop. Yep.
Now you should have
Yeah,
a
got a chart.
Euro
Yeah,
dollar
got it.
monthly.
Yeah, yeah,
Okay, cool.
Your IFS chart is not working by the look of things.
Yeah, not working, but
You
what
can
are
see
they
the
called?
way you see, right?
I guess what are they called? Demo accounts. We're up to date.
Yeah.
Yes, I looked at the real accounts earlier, and it was like the 14th of February. Hang on a minute. I
Mate,
know.
the
I've got a
problem
few
here is that
trades
you're
in
not
it.
logged into your demo account. You're logged into your live account.
And this is still current though, isn't it?
I'm not sure, mate. You're
Yeah, it should be, because once
you
you
can't see that corner on Zoom very well. I actually think you're logged into a
No, I'm not. Okay, that's interesting. Let me go back there then, if it'll allow me. Hope it remembers that password, because it looks all gobbledygook to me. Come on, you can do it.
There we go, buddy. Here we go.
Bingo, bingo. Right. Okay. It still hasn't updated though, has it?
What's that? That's weekly pivot. We've got five. I think we've got 5 bars there, Jeff. I think we're right.
Day
What's the chart? Euro, US dollar.
21st. Sounds right.
Yeah, yeah.
Euro, US dollar. Okay. So why? As you said, I'm an extreme trader, right? And we're pretty much at that extreme, I would have thought. It's right on that line in the sand of 108, let's call it 108. And if I go a little bit wider, you'll see why. I think it's at the last port of call, frankly, before this level here, which is like 300 pips away, or nearly 300 pips away. I just don't see how we can't test the bottom of this range, and let's call that a cloud. So maybe we're there. So yes, I'm expecting a bounce back to here, maybe back to 110.50, something like that. But I still can't see why we're going to break out of this range that, well, I call it a range, it's a descending channel.
Yep.
I can't see how or why we would break out of this anytime soon, but I'm more than willing to trade it back to there if we get the signal to do so. Then you've got to think why. Well, the answer to that is the dollar's got to come off, not the euro's got to strengthen, in my opinion. And the dollar did come off its highs, I think on Friday, but certainly one day last week. It has pulled back quite substantially. Whether that's a reversal or not is another story. But I'm not really interested in the euro at the moment. I'm far more interested in the Aussie. So I'll just give that a cursory glance, I suppose. Yes, I think we're at that oversold position that we're all talking about. And yes, I think there's probably a bounce on here. And if you do get a good reversal signal, it can probably go back to that area. Let's call it, it's going to take a long time to get there. Let's call it 110-ish. I'll be okay with 110-ish, and then I think I'll be looking for shorts again. The pound, I'm so close to just not thinking of ever trading the pound again. It's not funny. It's just hard to catch, and extremely hard to catch on a small time frame. At the moment, I'm bullish. I'm bullish because we've had a big breakout, taken out these highs. We've come back and retested the trend line. I think, and I'm not sure what will happen on Monday with this one. Never sure what's going to happen with the pound until it happens. But on shorter term timeframes, I mean, I can absolutely see this going, and yeah, maybe even retesting the highs at some stage, but certainly retesting this high at around about the 135.40 mark. So I'll be looking for that. That'll be my bias during the week, trying to trade the pound long against the dollar. Again, the dollar's come off the highs, so a little bit of a retrace on the dollar, I think, can go short, and therefore the pound can go long. So I'm happy with that. This is becoming a bit of a theme, except against the Aussie. Now, the Aussie has broken every level of support that is recent. when I say recent, I'm going back to 2014-ish to here, and it doesn't really look like it wants to stop anytime soon. Maybe a retest here is on the cards, but why would I stop? If I'm in a trade now, why would I stop? Why would I get out? I don't see why I'd get out of that. There is a level. If I go to the weekly chart, and these are these big double candles that are so annoying. I see that as the only level on the chart that can stop this going to like 60 cents basically, or whatever that level is. 63 even. So I just can't see why you'd want to get out of this. Okay, I get the keep your stops wide situation, because it will retrace and it will bounce and it will have a substantial retracement at some stage, but we've kind of had a reasonable retracement in, the 2.5 year period. I don't see that we'll go back any further than that, to be fair. So that level kind of in here somewhere, I would have thought. Let's call it that level. So 70 cents, I can see that happening. Retest the high here, but then, wow, I think we're gone again, to be fair. And, even if we have a small retracement, I'd be willing to get back into this. I'm not so sure against the dollar, but I'm reasonably confident, going back to what Ash said before, I'm reasonably confident that Aussie Swiss is still a sell.
Look, it's one of those things, Jeff, where for me, I mean, this isn't a show about me and what I'm going to do, but I've taken a bit of profit on the way down. I'll probably grab a bit more in the next few days if I get the right opportunity, and then I'll look to scale back in if I get the right opportunity to scale back in. We'll watch price action and let it tell us what it's going to do. I can see the case for I've been pretty happy to sit and do very little on the short for quite a while now. We've been quite happy to take my money, and I'll review it properly on Monday when I get my my platform.
Your account back.
Yeah,
exactly. But yeah, look, retracement. Yep, certainly, because we are at. Well, I actually don't think we're at an extreme. I think we've just gone through one, and that's my point. My point is the level that has just broken down, and I don't know why this won't go under my chart. That level there, which is 66.80-ish, that is, to me, the last bastion of Aussie boldness, if you like, and we've gone through it, in my opinion. So again, a retest here on a maybe a weekly or a daily time frame of that level gets me. It's tough to say, because if you're not in the Aussie short, you've missed out on a truckload of pips, right? So it's very, very difficult to say, okay, if it retraces 50 pips, then jump in. I can't advise that in any way, shape or form. But if it retraced 300 pips, then I'd say, okay, now's the time. So it's really difficult to say. But if I am in a trade short the Aussie, then I'm okay with probably trying to scale back in if it gets back to here. That's my point. Aussie Kiwi. Gee, I was keen on this as well, because you guys keep telling me that Kiwi is going to rally at some stage. And
look, I again, Jeff, there's plenty of stuff for an election year. There's lots of bribery going on over here. It's a great time.
no.
But the coronavirus thing is, New Zealand's a risk on currency, and it's risk off market, and we're paying the price for that.
Yeah, look, it's interesting to me, and one of the traditional risk on currencies is the yen, right? And it's kind of struggling. So I've kind of gone off the yen as a safe haven and gone to the Swissy big time. But going back to the coronavirus, I mean, what's next? We've had Trump getting elected. We've had Brexit, trade wars, Little Rocket Man, Iran situation, Brexit again. So at the end of the day, what do? Do we look at the bigger picture and say, well, okay, the big picture is really the place we want to be, because technically these things are in place and they change, from day to day, from week to week, from year to year. But ostensibly you're back in this kind of situation where, you know, we had Brexit phase 1 here, was it? No, not even. That's there's Brexit phase 1 there, I think. But since this turnaround, I can't remember what that was, to be fair. This has been completely predictable through all of that, what I've just mentioned, you know. So I think that still exists, the fact that we can trade technically if we're prepared to look at the bigger picture.
No, that's what we have you on the show for, to talk about the technicals. You know, we all trade technicals. It's just a matter of how much we're prepared to have a look at some other stuff. And for me, as you know, I'm pretty big at the moment on things like seasonality and bias and COT report and those kind of things. I think they're good for our clients to have a look at all that stuff as well as technical trading. But technical trading's worked for a long time. Will continue to work for a long time. I think that people who are new to trading, these days people don't spend as much time looking at charts as people like you do when you started. And if they're not going to look at charts, then having something else along the way that's perhaps more, you know, seasonality is quite an easy thing to learn. And charts just take some time, don't they? You're right. This move on the euro, it's just stayed in your channel, mate. And I imagine you've done pretty well out of it. You know.
Well, if you follow those things, then you've then got to adapt the process that goes from this sort of situation. And somebody asked last week, do I do my analysis on a weekly chart or a monthly chart or a daily chart? And the answer is no, I don't. But that's trading intraday. But if I then have a look outside of intraday, as I always do, and I see this sort of thing, and I think, well, hang on a minute, I've got to marry this up because we're at the bottom of the range here. I've really got to start looking in that direction. So if I'm looking to trade short here, and this goes back to the first point that I made, everyone's talking oversold, overbought at the moment, and it's perfectly, absolutely bang on the money. If these things are overbought and oversold, then I would suggest you go to the bigger picture and see if there is actually a chart pattern, I'll get it right. And if there is, then that's just another piece of ammunition in your toolkit. I'm going to leave you with this one. I'm going to leave you with Aussie Swissy. And the reason I'm going to leave you with Aussie Swissy is this. I don't think I've seen a bigger hole underneath something in quite a time than there is underneath this. Holy dooly. Have a look at that. And we're through every level of support on this chart, apart from the decoupling of the euro and the Swissy.
That was a hell of a day.
Hell of a day. But when I look at that chart, I think, okay, it's through the support. What do I do next? Again, I've got to go, gee, if there's a decent rally that I can sell off here, then I've got to be in that. Yeah,
fair enough. Mate, is that you for the technicals?
Yeah, I believe it is. I'm still, as you know, a very bearish Aussie dollar person. Well, sorry, Aussie itself, the currency, the Aussie, against pretty much anything.
You say you're very bearish the Aussie. You're still looking for potentially to hit the bottom of a channel and retrace a fair way and then go a long way further. You're not thinking right now it's going to go a long way right now. You think it's going to hit the bottom of the channel and bounce and then go a long way, right?
Oh, look, in this case, probably what I'm looking for. Let's put a little bit of a.
Oh, so I was talking about Aussie dollar.
Yeah, Aussie dollar I'm not that interested in, as I said. But when I look at that, and this is very, very similar to the euro that I just put on the chart. If that gets to here, then I'm not looking to short the market here. But if it got back to here, gee, I think that's a great place to short the market.
Nice.
So okay. That's the kind of thing I'm thinking of. And again, everyone said it. Don't open up your chart on Monday morning, go short the Aussie, because that's our bias. It is at extreme levels.
When you say that, Jeff, it's quite possible on Monday morning we'll open up our charts and we're getting pretty close to your level anyway.
May well be, yes.
Gaps on Monday morning look pretty likely to me. We'll have to keep an eye on them. I think there's a time, it's a time for patience and decisiveness. It's about waiting for your opportunity and then taking your opportunity. If you can do those things for the next those two things, wait for your opportunity and take your opportunity, you'll have a great month coming up. If you rush into the wrong positions, you'll get nailed. And if you hesitate when you should be trading, you just won't make the money. But if you get it right, if you're prepared to say, well, this is what I'm looking for, this is what I'm going to trade, and you follow that for the next 2 or 3 weeks, I think people make a lot of money trading Forex in a couple of weeks. I've got a couple of things to wrap up the show, guys. If you're with IFS Markets and the server is still down tomorrow morning, please feel free to contact the Actions to Wealth emails. We have no connection to IFS Markets. We're not financially involved in them or anything like that, but we're a big client and we'll be in touch with them early tomorrow morning. It's not uncommon for broker service to go down on the weekend. We haven't seen IFS go down for a while, but I expect them to be back to normal on Monday morning. If they're not, we're their client, they're our accounts, so contact us and we'll contact them. But we have no more connection to IFS Markets than you guys do. We're just we're big clients and we get a bit of muscle because we're big clients. You guys, if you're on the AW accounts, aren't clients, and you need to come through us to deal with them. I imagine we'll have that sorted out pretty early in the morning. We'll try and get something into the broadcast group before Singapore's awaken into trading tomorrow. If there's any issues, we'll let you guys know. Thanks for being with us. It's the second show on YouTube. It's a show where we're pretty battered. The whole team seems to have something going on this week, be it the flu or other issues going on. We'll be back next week. I think we'll be in a good place because we normally are. We look forward to your company. Thanks for those that joined us in the Zoom webinar. Thanks for those that joined us on YouTube. It's great to have your company. I hope you're getting something out of this. If you have questions about market analysis, throw them in the questions box in the future. We will try and answer them if time allows. If you have other questions and you're from Actions to Wealth, we do have a support webinar every Monday night. We have two mentorship breakout sessions a month now for you guys. While it's still been done online during coronavirus, there's plenty of opportunity to get your questions answered in the forums that are right for where the questions are being asked. If they can't answer Julian's questions, then we'll get hold of Julian and let him know and get some answers for you anyway. Once again, thanks to the team for being here. It's really appreciated on a day which has been a little bit brutal for many of you, or a week that's been a little bit brutal for many of you. We will see you guys same time, same channel next week. We'll look forward to it. We'll see you then. Take care, trade well, make the most of the opportunities that turn up. Cheers, guys. See ya.
Hooroo.